Okay, so for business owners, I think one thing that's important is working on your business instead of just always working in your business. A lot of business owners we come across, that's what they're doing. They're working, diligently day to day with customers and sales, but they're actually not working on procuring more business sort of on the outside. The other thing is, I think people need to focus, whether you're a business owner or not, or an employee of a company, you need to focus on your needs outside of work. Am I really looking aggressively at my retirement? Am I going to have enough for my retirement? When can I retirement? How am I investing? Does this all make sense? What about insurance? If something happens to me, is my family protected? Or if I'm a business owner, if something happens to me, is my business protected for my family? Those are, I think, really sort of key things on investing. And you got to get help. You got to get advice and have somebody take a look at it. Certainly we can do it. But those are, I think, three important key things, whether you're a business owner or an employee of a company.
This is the Play Your Position podcast, where we huddle up, call the plays, and inspire you to run your ball into the end zone. Are you ready to score more game-winning touchdowns in your life, business, and career? Then listen up, because it's game time, baby. Now, here's your host, Mary Lou Kaiser.
Hello, Team PYP. Mary Lou Kaiser here. Welcome to another episode of the Play Your Position podcast. It is game day here at PYP, and you know what that means. I've got today's starting quarterback suited up, ready to take the field. He is going to lead us through the latest and greatest about financial planning, what we can do with our money, how to set goals. His name is Rich Kasparian. Rich, are you ready for kickoff?
The team is ready.
That's important. All right. So, team, here's what I know about Rich. First of all, he is the founder of Garden City Financial Group, Inc. He and his firm work passionately with individuals, families, and businesses to plan, manage, and pursue their financial goals with confidence. Rich founded the firm in 2009 because he knew there was a need for sound, personalized, and objective advice in the confusing world of financial planning that sometimes seems to lack common sense. He is passionate about helping business owners and other individuals protect their investments to ensure a happy retirement. And on a side note, team, Rich lives in the neck of the woods close to where I grew up on the North Shore of Long Island, which makes me extremely happy to talk to a fellow Long Islander. So, Rich, welcome to the show.
Great to be here.
Yeah. So right out of the gate, my first question has to do with when did you get the call to leadership in the financial sector, and what is it like to play your current position?
The story sort of goes back to, I worked on Wall Street for many years, and then I was an advisor for Citi Smith Barney. And in 2009, the beginning of 2009, things were obviously collapsing in the meltdown. And the companies were making all kinds of crazy shifts and changes. And I was on a conference call one day, and it was a new CEO of our division. And she proceeded to go through all of these new things and policies and dealing with customers. And I hung up the phone and I remember calling my wife and said, it's over. I felt like I was on a conference call from a different company. It was a completely different. So I had to make a decision at that point. You pull up your bootstraps and you say, okay, well, I can go work for somebody and, kind of do this again as I've been doing for years. Or, hey, maybe I'll open my own practice. And that's sort of how it started. And, when you're doing something like that, it's a bold move. You have to really be sure that are your clients or your customers going to be with you? Are they going to come your way? And it was an odd story, but I remember being somewhere and, kind of looking over a list of my customers, and it's with little check marks, and said, okay, yes, 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 maybe. And that was sort of the spring of saying, I can do this. I can take my business and I can make it my own, and giving, the clients and customers actually even more access to different types of investments, insurance that maybe they weren't getting in the past.
I think that's interesting. There was I call that watershed moment for you where you had that call, and then that got you thinking that perhaps this was not the direction you wanted to continue, because you were an employee for all those years. And
that's right. Yeah.
Had entrepreneurship or starting your own practice ever been on your radar? Did you ever think about that when you were growing up, or was it truly out of circumstance?
It's funny you say that, because at about 19 years old in college, I was reading Entrepreneur magazine. I was, my dad was into that stuff, and probably got a lot of that from him. And I always had this vision of having my own company, my own business. But the odd thing about it is, whenever I thought about it over the years, it was always about a product, like what's out there that could be sold, on TV or infomercials. So actually a headhunter, and he said to me, did you ever just think about, taking, this on your own in terms of your own business? And as oddly as that sounds, I had always looked at sort of entrepreneurship as selling a product. And meanwhile, it's exactly what I'm doing now. But to answer your question, really, I was from 19 years old. I was reading Entrepreneur magazine. So I guess that kind of tells you where I was at even at those ages.
Yeah, you're subconsciously absorbing the nuances of what it means to run your own show. And yet you weren't ready for it perhaps until there was that moment when, again, by circumstance, you had to have that, that talk with yourself. What am I going to do next? And I find that interesting with people who end up running their own thing, because for a lot of people like you, it might have been a spark somewhere, but it just wasn't what was driving them forever and a day. And now, can you ever imagine going back and working for anybody else?
Absolutely not.
You have joined the official unemployable.
You're right.
Oh my goodness. Well, what is, you mentioned the financial collapse of 08, 09, which seems like a long time ago, given what we've just come through in the last 12 months. However, that was a big, big thing for those of us who lived through it and saw people some of them lose everything. Other people had to completely pivot and start from scratch again. What is challenging today for people with, say, investments or getting their money to work for them? What do you see out there, Rich, in the daily work that you do?
Well, I've always sort of considered myself, I guess the best word would be a contrarian. Unfortunately, a lot of the bulk of the people in my industry, the financial services industry, I don't really want to use the word pitch, but I'll use it, always sort of pitch, the green. So meaning, more money and, hey, if you go in this investment, it's going to give you this percentage return. And this is how this investment did 10 years ago. I kind of work backwards. So I look at what happens if something goes wrong in the market. What happens if there's a collapse? Do we have a parachute? Do we have an escape hatch? So there are many programs out there in our world that can protect downside, that can give people income for life with, again, protecting downside. So again, I think the term contrarian, there's anyone who's a Seinfeld fan, there's a funny episode. It's called The Opposite George. And George has always been doing things a certain way. And then one day he decides he's going to do everything opposite the way he's having success with it. So It's a really funny episode.
It's one of my all-time favorites. I love that episode.
Yeah. So that's sort of, I've really always been like this since I'm in the industry, because it's really, so if you could say to a customer or a business owner, hey, look, these are the investments, I'm recommending. But instead of me telling you from the start, hey, this is going to go up 8% a year, let me show you this little chart to show you what happens if it goes down 20%. So that's sort of one aspect. The other aspect that I view, unfortunately, again, there are people in the industry that if someone had $1 million to put away, or $100,000 to put away, or $10,000 to put away, many advisors will come up with a plan to invest every dime of that money. What I always say to a person first is, how much do you want to keep in the bank? So let's start there. How much, because for everyone it's different. Some people, the rainy day fund is $1,000. Some people it's $10,000, and some people it's $1 million. So using that as a starting point, knowing that, hey, if they need some money or something comes down, they don't have to start raiding their investment accounts or taking penalties or doing these things. They could let that money work, but they'll know that they still have money in the bank. So those are, I think, two key points. Number one, what do you want to leave in savings? And number two, what happens if the market turns ugly? And there are programs to deal with that.
Very interesting. What are your thoughts about the rise of the fintech, all these apps that are available to people for investing, money management and such? Do you have a viewpoint on, are they helpful, harmful, somewhere in between?
It depends. If we look at just sort of the latest thing that happened with GameStop and Robinhood and all of these sort of things, the issue with those sort of investing platforms is a lot of the investing becomes sort of a story. So, the company is a good story, I'm going to buy it. Or it said that I should, there's a buy recommendation on this, it should buy it. When actually investing really in the big sense is done using charts, is a technical analysis. And what technical analysis basically is, if you've ever looked at a chart for a year on a stock or on the Dow Jones, it tells a story. And it's sort of an up and down story of a stock or an index. Well, those stories don't lie. And when electronic trading is done, which is what it's done now, when a mutual fund is purchasing a stock or selling a stock, it's not somebody saying, hey, a good news story came out on that company today. Let's buy more or let's sell some. It's what the chart tells them. So to sort of answer your question, I think it's sort of good if it's gone in the right direction. Unfortunately, though, a lot of that investing is emotional and is news driven, opposed to how do things actually look against the market, and how do things actually look on a chart.
Which is where the human, like yourself, comes into play, and why there's still so much value to working with an actual person who has a history and a perspective. And so as far as who has been your coach, Rich, somebody who has guided you, who do you turn to when you need to get that shot in the arm to keep going or to learn something new so that you can show up to your leadership role more effectively?
I can't really say that it's one specific person. I think it was basically the experiences all along the way. On Wall Street, I had worked for a gentleman who was a head trader who had helped Charles Schwab set up his trading system. He was an amazing trader, and he basically taught us how to read the charts. I could go back to an internship that I had in college and remember those specific people saying, this is how you do this, or this is how you do that, or an old job. So I think I don't think there's really any one specific person that I sort of look towards. But I really think it's really just those past experiences the culmination of those people sort of almost create your business personality. That's really how I view it.
That's interesting. If there was somebody listening today who either had a young person in their life or they themselves are a young person and they're considering entering the financial market, the investment side, what would you advise them to think about, consider?
Well, we have a lot of interns come through, Garden City Financial Group. And I always, when they come in, I will always sort of address the issue at the beginning when they start and, when the internship is finished as to what sort of direction they want to go in first. There are some people who don't want to be in front of the public. They sort of want to be behind the scenes, maybe more operations, or maybe, technical analysis. They want to be an analyst. Then there are those people who sort of want to be in front of the clientele. And if that's sort of the direction they want to go in, I'm very upfront. It's a very, very tough business to break into. It's not one of these things where you say, hey, I passed my Series 7 exam and a few other exams. I have an office. I'm here. The phone doesn't ring in this business. The way it's going to ring if you're calling a store for an item. I'm saying it rings, but it rings in a different way. So in many cases, I just have to say to those, interns or people wanting to come into business, you're going to work for a good few years making little to no money, trying to build a clientele. And at that point, once you have your footing, then you can grow your business from there. And initially you really have to start working for a firm. It'd be very, very hard to just say, open the doors and say, hey, I'm a financial advisor. It really doesn't work that way.
I did not know that. And thank you for sharing that insight, because it's an industry that gets a lot of press, obviously. And there are people who think, oh, this would be really cool to help manage people's money or, help people grow their business through great investments and all the stuff that you do. And yet what I'm hearing you say is go out and almost have an apprenticeship for a while working for a big firm to learn the ropes.
Yeah, and it doesn't necessarily always have to be a big firm. I mean, certainly doesn't hurt because generally the bigger firms have better training, more established training programs.
Sure.
But it really is that way. There's really no easy way to sort of kind of do it. I mean, unless you're going to bug everyone in your family or every friend and then they don't want to talk to you anymore.
Right.
So that's really the way to break in and to crack in.
Okay. So Rich, we're at the part of the show I call Move the Chains. And you get to tell a story about a time when you found yourself playing out of position, when things did not go according to your game plan. You fumbled the ball, you were sacked, or you threw the interception that lost the game. Could you tell us that story? And then what lesson has stuck with you since then?
I think I have to come back to sort of the story of how my previous company was going through that sort of financial collapse. So you're sort of on this path. You're with a company a long time. You're doing well. And basically at that point, in one phone call, the floor was basically pulled out from under us. And it was some bizarre ways they were basically almost telling us that the customers weren't the right customers we were all dealing with, and they needed to have more money invested. And it was sort of kind of wacky, crazy stuff out of the box. And you need to do it only this way and only, and if clients don't have X amount of dollars with you, we're going to just send them to a 1-800 number. And I'm listening to this bizarre stuff and I'm saying to myself, this is crazy. So at that point, you think you're doing things the right way. Things were going well. People were happy. Your clients also during that, because of the way I structure my business with protections and downside protections and income, your clients were well insulated during the crisis. And I had to jump off the moving train. So at that point, you say to yourself, the lesson is, do I sort of just continue this somewhere else? Or do I make the bold move to do it on my own? And then I started interviewing various brokerage firms that allow independence, so to speak. They help you and do all those things. And then I started to look deeper into it. So the odd part of this whole thing is you have this big decision you're trying to make. And once you sort of get to that decision, the next thing you're picking out chairs, furniture, desks. You're looking at floor plans for office space, like sort of all this bizarre stuff. Mm-hmm. But I think what I've learned, sort of from all this, and it's sort of cliche, everyone hears it, from people who are business owners who did it, but I'm going to say it anyway. You got to take that negative moment, that moment where it looks like sort of everything's collapsing, and you got to just go with it. You got to go where it sort of takes you. And it was all one conversation from one headhunter who said to me, "Did you ever just think of taking this on your own?" And that was it. That's kind of where it went.
It's halftime here at the Play Your Position podcast, and we've got ourselves a great game. While you're up grabbing another snack and topping off your favorite beverage, make sure to subscribe to the show so you never miss another play. PYP is available on Apple Podcasts, Spotify, and wherever great podcasts can be found. Now, let's get back to the game.
Yeah, I love that story. And you listened.
Yeah, I did.
I did. Some people would not have taken that to heart and perhaps gone on to find another place where they could just slide right in and continue on that employee track. And there's nothing wrong with that. There are a lot of people who don't want to have the responsibility of business ownership. And as you've discovered, I imagine it's a different beast altogether. And you have to show up differently. You're suddenly responsible for everything, like the furniture, the floor plan, the plants, all of it. Well, the world is constantly changing, Rich, as we know, and money continues to flow. Obviously, it just seems to ebb and flow in different ways. When you look into your crystal ball ahead the next 5 years, what do you predict is going to have the greatest impact on? I'd love for you to stay in your lane of an investment guru. I don't think you're a guru. That's not the right word. Daniel, edit that out. You're an investment specialist, somebody who really understands all the different ways a person can get their money to work for them and also protect them, which I like that you look at that side too. It's not just about grow, but it's about what happens if. And we all know that what happens if will come along sometimes. So what do you see happening with our money in the next 5 years?
A lot of this will be predicated on, what will taxes look like? What will inflation look like? And these sort of indicators, there's a lot of talk now. Inflation's coming. The government's printing money. The government's been printing money forever. I mean, we know that. Mm-hmm. And the odd part of it is, like, people will say to me, but how come inflation never really goes higher? It's been, I'll give you an example. I remember in 2012, there was this whole scare. Inflation's coming. And it never seems to come. Well, what a lot of people don't realize is the indicators, like the inflation indicator, the CPI, Consumer Price Index, is, for lack of a better word, is a made-up number. So for example, if there are components within that Consumer Price Index. So let's say there's beef in it, there's wheat, there's all different other commodities. If one commodity jumps to a crazy number, So, man, a few years back, you remember beef went through the roof because of the mad cow thing.
Right.
Well, what a lot of people don't realize is, so if beef jumps up 25%, you would say, wow, inflation's going higher because of that index right now. What they do is they take beef, they take it out of the index, and they find a new one to put it.
Huh.
So the number is a made up number. We always also hear about unemployment. Well, if someone stops looking for a job, they don't count anymore.
Yes.
So unfortunately, we judge things sometimes on, and I guess that's sort of where my contrarian comes in, because I'm not always saying that, the sky is blue. You have to be, and I educate my customers on that, on sort of these little things that go on in the market. Because you have to be aware of it, because if you're going to predicate your investing decisions on things that could happen or may never happen, it's difficult. I think really the overall principle, whether it be on taxes or where jobs are going to go, I think you have to look to grow a portfolio, but you have to have a downside protection or coverage to help it. Now, a lot of people will say to me, well, I have a plan set up and it's diversified, and that it's diversified means I'm protected. Well, diversified does not mean you're protected. All diversified basically means is I've got a bunch of stocks and then I've got a bunch of bonds. And if hopefully the stock market crashes, the bond market will help me, and vice versa. But that's really not necessarily, diversification doesn't mean protection. It means it's a hedging yourself. Whereas, as I keep coming back to it, the programs we set up at Garden City Financial Group are more tailored to what happens if the market drops 20%. Do you have coverage? Mm-hmm. In many cases, there are programs where you will have coverage and you can absorb those hits. Is there a program that could, if I retire, give me income for life that's guaranteed? Yes, there are. Even if the market drops, yes. So I think really that's there are a lot of myths out there. And there's one other one I'm just going to jump in on.
Yes, please do.
Because what we do is we do a lot of reviewing of people's 401ks, or when they retire, they're looking to roll it over into something more protected. And again, they'll say, can you look at my 401k? And we look at a 401k and say, well, it's well diversified, right? And what you'll find is you'll see a person will have 5 or 6 or 7 different mutual funds in their portfolio. And they all have nice names: growth and income, moderate, whatever. And a blend. A blend is another one, BLEND. And when you dig down into these funds, what you find is, and it's really odd, they all own the same stocks. So you'll have a person, for example, that'll own 4 different mutual funds that have 4 different names, and just assuming. And then when you dig down and drill down, this is one of the things we do. They all own Apple, they all own Google, they all own Amazon, and the list goes. So the diversification isn't even there when you try sometimes. So you really have to drill down when you're doing, and one of the things we review, when people come, what I call a financial checkup, in fact, that's on our website, is we drill down into like, what do I really own in these portfolios that I think are diversified?
That is awesome that you take an educational approach with your clients and don't leave the myths just hanging around. I'm curious. There are, I think, 5 generations now, all running around doing different things. I'd love to hear your take on, say, the difference between Gen X investors and millennial investors, and you could even throw in baby boomers. Do you notice a distinct difference in the generational approaches to how they look at their money, think about their investments, or is it pretty streamlined across the board?
I think the baby boomers, which is obviously a big part of our business, the baby boomers were great savers. They or many of them were great savers, and then even the generation before them were even, but they were good savers. Now, you could argue, well, it was the time they grew up in. It was a different way of looking at everything. But I think they were good savers, which is a big thing. And now what I'm seeing is sort of in our practice, and now, those baby boomers, now we're dealing with their kids in many cases, because that's another important part of the business. When you're dealing with a customer, you should get to know the family. You should get to know the husband, the wife, the children, the aunts, the uncles. It's an important thing.
Mm-hmm.
But I would say that their kids, the baby boomers' kids, in many cases don't have as much to tuck away. Things are more expensive. They're paying for a lot more for their kids, all, activities and private things. And so I think that's really sort of the difference. So I really impress upon, when dealing with millennials or even younger generation, that do what you can. You have to tuck money away quietly, meaning in that 401k at work, and forget about it. Put a little money away into this. Take X amount of percentage out of your check, and put it into an account somewhere. Forget about it. And I think that's really the way to kind of approach the differences.
Thank you for that. The story around money is an interesting one. And I find it interesting when I talk to people like you who have been in this world your whole professional life, and you've seen the ups and downs, you've seen the rises and then the crashes. And I'm going back to something you said earlier about these made up numbers that are thrown out. The average person, and that's most of us, we're not financial experts. And if there was one thing I'm hearing you say is, get help and find an account that you can just, I love that, quietly tuck money away, because the numbers could change on a dime. We don't know when. And you said they. Who is they? Who's controlling that number that you talked about? Is it the government? It's, you got to realize it's the government, it's the Fed. I mean, if you look at how the Fed operates, the Fed controls rates basically. And those and what they do with rates can upset the market and can keep the market booming. That there's an old story in the year 2000. If you remember, that was the internet tech boom. Yes.
In 99, you would buy a stock for $3 and you could sell it at the end of the day for $9. Mm-hmm. It was crazy. And there was an old story. In fact, it was in Money Magazine years ago that Alan Greenspan, who was the head of the Fed, was enraged about what was going on in the stock market, that these companies that were virtually worthless, which many of them weren't, because many of them are alive now. So he was wrong about that. Well, worthless were doubling and tripling and quadrupling in a matter of days or a month or 2 months, that he systematically raised rates. And what happens is if you start raising rates, the market's going to tank. And so a lot of people remember the crash of 2001 and always sort of linking it to 9/11. Now, 9/11 did, whatever devastation was there in the market, it caused even more, obviously. But people forget that in April of 2000, as Greenspan started to raise rates, he crushed the market. And he basically later on admitted to doing it almost on purpose. So,
Thanks a lot.
because he thought the market needed to be in check.
And
you could argue that, look, maybe to an extent he was right. Should a company be doubling in one day or tripling in a week? I guess in a lot of cases he was virtually right. But those interventions could certainly help So if the Fed lowers rates in an economic crisis and makes money lending cheap, it usually fuels the market. You could argue that's what got us through COVID. You know, people forget just about a year ago on, I think it was like March 24th, the Dow went from 28,000 to 18,000.
I remember that.
You know, and now we're in the 30s again. And so if Fed policy wasn't altered during that, would we be where we are? Probably not. So the idea is you need a person that could sort of make sense of these things.
Yes.
I would just based on years of conversations with customers who make changes from advisors, and most advisors sort of don't get into this. I just do. I've always had an interest in it, and I always try to find the reasons. How could I look at the news one day and that story meant the market went up, and then the next day some editorial saying that story made the market go down?
Right.
So you try to make sense of it and do the best you can.
Yeah. Well, it sounds like you do. And doing the best you can involves running the ball into the end zone for that game-winning touchdown, Rich. So I'm putting you in the red zone. We are at the part of the show I call touchdown. There are less than 30 seconds left on the clock. You are down by 4 points, which means it is now or never because it's third down. Tell us a story when you ran that metaphorical ball into the end zone for the game-winning touchdown.
This was a story many years ago where I had a customer, and it's probably, I'm in my own practice now about 11 years, so it was probably early on. And one of my customers wasn't a large customer, had an investment somewhere, and she was just very, very unhappy with it. And she was relatively a brand new customer at that point. And she said, I want out of this. I want out of this investment. I don't like this company. And I just started to ask questions. I mean, I could have easily at that point said, okay, we'll do this for you. And I just didn't. I don't know. For some reason, I took a step back and I just started to say, okay, well, do you have any others like this? And I just started to ask a lot of questions. And before I know it, over the course of months, every few days, she would come into the office and just drop in more and more and more paperwork and more and more and more accounts and stock certificates that were sitting in drawers and became one of our largest clients.
Wow.
And it was all because of taking that sort of step back. You could say the timeout before the touchdown.
Right.
Taking that step back and saying, wait a minute, do I just help on this thing, or is she really asking for more help? Because obviously somebody put her in this thing she doesn't like. And that was it, and really became one of our largest customers. And in fact, her family always thanked her because she was very aggressive sort of investing. And one of the family members always said, I'm glad you sort of pulled things back a little, because she was crazy the way she was investing, So, but that would be one of those situations.
That's a great story. That is a great story. And it says a lot about you and the way you operate. You listen. You aren't quick to just jump in and okay, I'll do what you say. But asking questions is such an important part of, in my opinion, any kind of client business relationship, because you want to know what's going on here. There's always more to the story below the surface.
That's
always,
right.
always. Well, Rich, as we wind things down today, could you please share with us 1 to 3 key offensive strategies straight out of your leadership playbook that listeners could implement right away to make some forward progress in let's talk about their money life, their investments, their savings. What could you share?
Okay, so for business owners, I think one thing that's important is working on your business instead of just always working in your business. A lot of business owners we come across, that's what they're doing. They're working, diligently day to day with customers and sales, but they're actually not working on procuring more business sort of on the outside. The other thing is I think people need to focus, whether you're a business owner or not, or an employee of a company, you need to focus on your needs outside of work. Am I really looking aggressively at my retirement? Am I going to have enough for my retirement? When can I retirement? How am I investing? Does this all make sense? What about insurance? If something happens to me, is my family protected? Or if I'm a business owner, if something happens to me, is my business protected for my family? So those are, I think, really sort of key things on investing. And you got to get help. You got to get advice, and have somebody take a look at it. Certainly we can do it. But those are, I think, three important key things, whether you're a business owner or an employee of a company.
Mm-hmm. Great advice. Thank you for that. And for people who'd like to learn more about you and your services, where do you hang out online?
Okay, so you could check us out, www.gardencityfinancialgroup.com. You can click on the Contact Us page, and you can basically request a free financial checkup. You just plug in your basic information, your name, your email, shoot us a quick message of what you're looking for, and we'll get back to you as soon as we can, and hopefully we can help and start helping you with some planning. You could check me out on LinkedIn, Richard Kasparian on LinkedIn. We also have Garden City Financial Group also has a YouTube channel. You'll see some good videos we put up there. Also on our website, you can see some of the blogs I put up over the past as well. Excellent.
So team, the links to those places where Rich hangs out online will be on his show notes page at pyppodcast.com. And I always encourage you to take advantage of people who offer their time to have a conversation with you about what's going on, especially when it comes to your future with your investments, your money, your retirement. These are things that sometimes can get pushed aside because the day-to-day does get precedence a lot of times. And then you wake up one day and realize, oh boy, I better start thinking about this. Oh my goodness. Well, before we say goodbye, Rich, who is your team? Who or what do you love to watch on Sunday?
Oh, I'm a New York Giants fan.
There you go. New York Giants. We keep hoping. We
keep hoping is right.
There were some bright spots I think I remember seeing this past season, and then not so bright.
Yeah, I think Daniel Jones could be the guy, but we'll have to see.
Right.
Hopefully he could stay healthy, and we'll see what his future looks like.
That's right. Well, we just finished football season, so we're in that downtime where us football fans are looking already ahead to August and hoping for a regular season. And hopefully
that would be great.
Yeah, 2020 was an anomaly. Let's hope that that's behind us for good. But thank you so much, Rich, for your time today. You really shed some light on a topic that is very, very important for everybody to be thinking about. And I wish you all the best as you continue to grow your practice and help more people make the most of their money.
Thank you, Mary Lou. It was a great show and a pleasure to be on your show.
Hey team, Mary Lou here. Who's number one in football changes from year to year. Fashion trends come and go, same with musical tastes. But leadership skills, they never go out of style. In fact, these days, leadership is an essential survival skill for a world that demands more from us than ever before. To succeed these days, you need to know how to show up for yourself so that you can then do the work you love with people you like the way you want. The Play Your Position Leadership Playbook helps you do this, and it's free. Go to pyppodcast.com to download your copy today. If being more successful this year, next year, in the 21st century is on your to-do list, get your copy of the Play Your Position Leadership Playbook now. pyppodcast.com. It's at the top of the page. You can't miss it. That's pyppodcast.com, and start being more of the leader you are meant to be today. This podcast was produced by Daniel Romeros. Show notes for this episode can be found over at pyppodcast.com. I'm Mary Lou Kaiser. Thanks for listening.
Got a great key offensive strategy you like to share? Write to us at coach@pyppodcast.com or on Twitter, use hashtag PYP and let us know how you're running your ball into the end zone for those game-winning touchdowns.